Oh, hi. Welcome. I'm Bob Thompson, and I'd like to welcome you to the Philanthropic Planner program. Why the Philanthropic Planner program? Well, it's to kind of get that crazy boring subject out there, and we want to create some meaningful dialogue on a friendly basis and talk about the importance of giving to the local community, to state and regional, to national and global efforts. But we want to kind of simplify the process for you, and by talking about it and freely promoting conversation with you and your family and colleagues, that we might just benefit the community a little bit more. We don't talk about philanthropy. We talk about a lot of things from Facebook to iPads and crazy stuff on TV. Sports, we're always talking about sports. So Tebow coming to the Patriots is probably the biggest subject since, since the volcano. No. Anyway, we want to talk about philanthropy in the context that you don't have to be a multi-millionaire to be a philanthropist. Philanthropy comes in a lot of different forms. Volunteering is one form, and today we're finding a lot more volunteerism out there. Certainly this is part of this continuation after our recession. People are being more involved with their favorite nonprofits and charities. So that's one form of philanthropy. The other forms come with some type of legal document sometimes. We don't want to talk legalese or a lot of tax issues or whatever, but they're all incorporated in the process of philanthropy. So let's get started. We usually start with talking about local news, local philanthropy, state, national, and so on. And on the local basis, local area, we just had Jim Calhoun's Bike, Walk, and Run Day here in Simsbury, Iron Horse for cancer. And that's an annual event, and quite honestly, it's become very, very popular. The participants in all three of these biking, walking, and running events. And it's a community effort and certainly is for a worthy cause in cancer. I'd like to also refer to a local fundraising event. It's going to be passed by the time you see this, but Burger on the Bridge is an effort fundraising to raise funds for the Flower Bridge. They needed some additional monies because of some unpleasant circumstances, vandalism with that. But you might keep an eye out for that. I think it's going to be an annual event. I hope it is an annual event. But a good time for the community to get together again for a worthy cause. I might mention just a day or two after our last program, another annual fundraiser for the fountain just across from Abigail's. And every year there's a fundraising for the maintenance of this really historic fountain that is an asset of the community of Simsbury and the Farmington Valley. So you might keep an eye out for that again in the future. And back to the Flower Bridge, I'm sure that you can donate if you go in to Simsbury Patch or into their site. You can donate to the Flower Bridge, certainly worthy causes. Also, on the national level, and I'm getting tired of talking about the American Taxpayer Relief Act, but we're finding out more and more of the impact of the act, and we have other issues that I'd rather not talk about in depth, but as it impacts nonprofits. We're seeing in the Chronicle of Philanthropy that I always start with some concern expressed by a wide number, a vast number of nonprofits concerned about this IRS so-called scandal with respect to nonprofit applications, about IRS looking into the 990 form for major donors, just that whole mess there. And maybe in future programs we'll learn more about what actually happened, the impact of that. But not a good subject, but we do like to at least let you know some of the concerns that we have in the nonprofit area. And there are always some of those concerns, but the IRS situation is really not a good one. Also in the American Taxpayer Relief Act, we have some issues that will impact donations and philanthropy. We know that at certain adjusted gross income levels that Medicare tax and some other things, and I'll talk about that further in a minute or two. But in fact, let me talk about that now. Every day, every day we have examples of philanthropy, and we don't see it necessarily in the press. But a couple of months ago, I made a reference to a technique, a strategy of charitable gift annuities. And because of the low interest rate and taxes that we have, net disposable income becomes a concern after taxes and not receiving income. So I'd like to share a recent case where son Brian, his mother is Sally, and Brian and his mother were talking about required minimum distribution that Sally was forced to receive. Her husband died a couple years ago and left an inherited IRA. And because of her income level as a single person now, under the American Taxpayer Relief Act, she's subject to an added Medicare tax. She knows each year that her required minimum distribution from her inherited IRA and her own IRA is going to be increased. And the projection by her planning and her CPA is that increase is just going to add more. All of that RMD IRA distribution is taxable 100%. So son Brian and Sally, because of the accountants concerned on the added taxation, Brian had seen a program 2 or 3 programs ago about the laddering of gift annuities. And this kind of resonated, and they asked the CPA, and the CPA, in looking at this 5-year ladder. Previously, I was talking about another example of a 10-year plan of laddering these gift annuities. And in this case, the accountant looked at the non-taxable aspect of it. Now, let me quickly go through this and forgive the technicality of it because we're not supposed to be doing that. But we have, because of the low interest rate and the AFR rate, which is an applicable federal term rate that you don't have to remember, but it's a low rate today. And by using cash for her gift annuities, Sally will receive 82 to 84% of income from this annuity, not taxable, non-taxable, an exclusion. So 82 to 84%. And in Sally's case, the accountant's spreadsheet said that Sally can receive $64,000 but only 11,000 of that 64 is subject to tax. So Sally receives an income tax deduction, and by using tax, she can get 50% of her charitable contribution into this gift annuity. Because it's cash, 50% of that is a deduction. So she gets a deduction. She gets 82% of her income, life income stream, 82% not taxable. And the accountant said that that's an equivalent of 5.3 to 5.4 taxable equivalent. And the accountant is saying to Sally and Brian that in today's environment and in the near foreseeable future, pretty hard to get a guarantee of 5.3% on her monies. So what this does, bottom line, for Sally and her son Brian, is that Sally is able to incorporate other planning strategies, perhaps in annual gifting, perhaps in her estate plan and so on. But it came about because Brian and Sally were reviewing mother's wills and her irrevocable trust. I thought I'd share that with you because it's an example of philanthropy today, and we just don't talk about gift annuities that often. Certainly the charity and sending out letters and solicitation and examples, they will talk about gift annuities. But do we just receive these and say, that's not, doesn't hit home with me? But today's program was triggered by a previous program. I read a letter from a lady, and in that letter there was one line that said, and the light went on. So the title of our program today is, And Then the Light Came On. And a subtitle of that is, A Catalyst for Philanthropy? ? The light went on. So let me relate what we look at in our firm on a daily and weekly basis in what we call behavioral finance. Why do certain people act and react as far as their finances in a good or bad way? What is the reason, what triggers their thought process in their habit forming way of living, okay? What makes certain people save money for retirement while others naturally procrastinate or choose not to, okay? How, why, when do these things happen? So a catalyst for giving, in The Light Came On, she expressed, wow, I had never thought about doing something like that, and the light came on. So what triggers it? Is it our environment? Is it events? Events such as Sandy Hook massacre, and it triggers a feeling to give to a cause like that? Is it natural disasters, tornadoes, Superstorm Sandy, hurricanes? We see disasters, tsunami, and events like that triggers something that we want to help our fellow man, okay? We want to aid our neighbor. We want to relate in some way that, but for the grace of God, there go I, and I could have been in that tornado and had my whole life changed in an instant, finding my house is gone, all my possessions are gone, and the only thing I have is a shirt on my back, and maybe we lost loved ones. So we relate as human beings to people that are impacted by natural disasters and events, as I mentioned. Is it our culture? Is it a part of our upbringing? Is it because of religious faith? We've had on the program before Rabbi Steve Fuchs, and we talked about the difference between caritas and tzedakah in the Jewish faith. And caritas for Christianity is one of charity. It's one of compassion and love. It's one of giving. And if we look at what triggers it, it may be family or religion or something that brings to us this virtue of giving. So is it that triggers our giving, a catalyst for giving? In Islam, zakat is very similar to caritas and tzedakah, in that in Islam it is aiding. It's really a tax in the Quran, a tax of aiding the poor. So we have in different faiths. Now, Buddhism is different on the surface, but if we study and learn more about Buddhism, and it is one of introspect and really a deeper going into a void, going into space, going into meditation in some form, but it really has the same effect. The triggering of it is thinking more about the events and how I can impact because of the event. So all of these may play a part and be a trigger or a catalyst to our giving, but behavior-wise, and then the light came on, she said. And in that, she was referring to her planning, her revisiting, and it happened to be, again, very common, after the first of the spouses to die. Then there's this chain of events of thinking about reviewing wills, gifting to charity, leaving a legacy for children or family members and that kind of thing. So we know in that case what triggers it. But then the light came on. Now, we jokingly talk about the light's on, but nobody's home. But in this case, for a lot of people, the light isn't on, but the people are at home. So a lot of people, the light may come on at different times because of different events and triggering that type of thing. But in the case, the examples that we gave in different faiths, the light is always on, the dimness or whatever, but there's still, the light is always on. There, in each of these examples that we talk about, it is the virtue of doing what's right and just. So if we relate to the disaster, if we relate to these different things, and that's what triggers it, my concern to do good was always there. It's just that something triggered it. The light came on, and that's what triggered and motivated the individual to write out a check to the charity, to write out a check to Red Cross or Salvation Army, to write out a check to a favorite charity, a university, or the symphony, or a hospital. So it's because of these triggering events that brings out something that's already there. My philosophy over the years in this hobby turned obsession and thinking more about philanthropy and the good that it does for the community and for mankind is that everyone is philanthropic in my mind. And it's not until an individual or people say, no, I'm not. And very few people say that. They say, well, I don't give a lot to charity and that type of thing. But it's these same people that say, no, I'm not charitably inclined. It's the events that trigger it. The light came on. So I wanted to share that with you and share with you the stories of son Brian and mother Sally, that something resonated and said, okay, maybe the triggering event is tax. And for a lot of people who end up, I hate to say it, but a lot of people that eventually consider the difference between voluntary tax and involuntary tax is that the involuntary tax is, I did nothing to alter that. It was one of my inactions. So involuntary tax is what you and I pay in various forms, okay? The voluntary tax is one of, I could have had the tax, $1,000 going in income tax or capital gains tax or whatever kind of tax over here. But the voluntary tax is taking the same amount of money, that same $1,000, and directing where I want my tax dollars to go. Maybe it is to the hospital where my family member was cared for and ultimately passed. And I want to remember the good that the hospital and their staff and their doctors and everything, I want to take that $1,000 that would have gone in that involuntary tax, and I want to redirect it over to the hospital in that case. Nonprofits are hurting. Nonprofits need you and me to turn that light on and not have a triggering event of a disaster, but just to say, do I have the capacity? And we talk about capacity to give. And if it's income and I didn't spend all of the income, and that income is going to be replaced every quarter, every year, and I have the capacity to give. Remember Sally? Sally was taking cash and increasing her income and decreasing her tax. Now Sally still has concerns about long-term care and health issues and that type of thing. But think about it. If she's able to increase her income, that increased income can go for long-term care, for nursing care, and so on. So she's been a good steward of her assets, of her money, and utilized it in such a way with lower taxes and increased income. So that's an important aspect of philanthropy that we think is a common part of our daily lives. Now, in the future, we're going to look at more of the impact on increased taxes. We're going to look more at an increase in a different kind of giving, maybe tax motivated, maybe for other reasons, but in the last year, we've seen a dramatic increase in donor-advised giving, donor-advised fund giving. Now, part of that reason is at the close of 2012, people were looking at various threats, various events on the tax nature, and saying, whoa, maybe I should give in 2012 so that I don't pay more tax, either capital gains or whatever. But this increase in donor-advised fund giving is something that we're looking at. One-third increase since our recession in 2008, 8 and 9. An increase in donor-advised funds totally. Now, 47%. But the giving from the donor-advised fund has only increased 7%. So we are looking at that, monitoring that, and saying, should the donor be more active once the funds are transferred to the donor-advised fund in donating more out of that fund, that designated fund? It's something that not only the nonprofits are concerned with, but we're having Congress look at that and say, should we require a certain payout from the donor-advised fund, similar to a private foundation where they're mandated to pay out at least 5% every year? So we want to talk about donor-advised funds in the future, but what is the triggering event? The light came on, and maybe that was a catalyst for giving. See you next time. Write out that check to Simsbury Community TV, by the way. Funding for Simsbury Community Television is provided in part by contributions from viewers like you. Thank you.